Are you afraid of crypto taxes? Listen, it doesn't matter if you're in the US dealing with the IRS or in any other country. When you're filing your crypto taxes, it can be a little bit frustrating and even a little bit scary at times. But I don't think it's anything that you should be afraid of. At the end of this video, I'm going to kind of share my thoughts on how I manage my own cryptocurrency taxes as a cryptocurrency investor and as a law-abiding citizen who absolutely hates paying taxes. But at the end of the day, it is something that we have to do. So I try my best to do it in the best way possible that is within the bounds of the law. And I'll kind of share with you a little bit of my philosophy at the end of this video. Now, in today's video, I'm going to share with you 10 tips or 10 things that you need to know before doing your crypto taxes. Now, tip number one that we're going to go over is a common misconception for people who are new to cryptocurrency. Tip number 4 on this list is going to save you a lot of money if you're a hodler in the cryptocurrency space, meaning you're just buying and holding long term. Tip number 9 will get a lot of people in trouble. There's some common misconceptions. I'll share that with you as well. And stay tuned for tip number 10, because tip number 10 is almost impossible to do. Or the number one thing you need to know is that cryptocurrency in the US is seen as property, and transacting with cryptocurrency is very similar to transacting with some sort of an asset like a stock or other investment. In other words, cryptocurrency is not treated like money for taxable purposes in the US. Tip number 2, every single transaction is a taxable event. Now, here's what this means. All buying, all selling, all spending, all trading, everything triggers some sort of capital gains or losses. So there's a lot of people that will be like, hey, I'm going to send money to this exchange, and if I withdraw a profit, I'll pay taxes on my profit. It doesn't work that way. Every single transaction has to be tracked. You're legally responsible for keeping a record of that transaction, and wins and losses are counted on every single individual transaction. That does not need to be daunting for you if you're trading on centralized exchanges. I'll give you some very simple help here towards the end of the video. Tip number 3, record keeping is crucial, and we just talked about that a little bit. It's vital to keep detailed records of all of your crypto transactions, including the date of each transaction, the amount in US dollars at the time of the transaction, and any gains or losses. These records are necessary for accurate tax reporting, and in the event an audit is ever triggered, they're going to want to see these very detailed records. Now, I had over 41,000 transactions last year, and that can seem daunting, but there's a software that I use that made it very, very simple. I'll share that with you a little bit later. Tip number 4, capital gain tax rates apply. So this is really good if you're a hodler. If you hold any crypto asset for over a year, and basically you can owe less on your taxes than if you just trade it out within a week or within a couple of months. Cryptocurrency received as income. So if you receive cryptocurrency as payment for goods or services, pay attention to this, or as earnings from mining, it is taxed as ordinary income at its fair market value at the time of receipt. So here's what that means. If you were to receive $50,000 in payment in the form of one full Bitcoin. So someone gave you one Bitcoin for payment, and then you held onto that Bitcoin. In the future, it goes up $20,000. What that would mean is $50,000 of that value is going to be taxed as income. And I know that's a bit confusing. And $20,000 is going to be taxed at some sort of capital gains rate, depending on how long you held it. But if you got that one Bitcoin and you didn't sell it, you took a $50,000, in Bitcoin from some client or customer, say they bought, a car from you or something, and then you held onto it, and a year later that Bitcoin is worth $30,000 and you haven't sold it, you owe taxes on $50,000, not $30,000. And you owe the taxes even though you have not yet sold the Bitcoin. It is taxable as income the moment it is received for payment for goods and services at the current price that it is received. This makes it very, very challenging for lots of businesses to be able to accept cryptocurrency. And those of you that may be accepting cryptocurrency for goods and services, be aware of tip number 5. Tip number 6, this is just telling you what form to report your cryptocurrency taxes on. Form 8949 and Schedule D. You can write that down. Those of you in the US, make certain that you have that filled out. Okay, tip number 7, this is an important one. The IRS is watching. So the IRS is increasingly focusing on crypto transactions. They've already sent thousands of letters for cryptocurrency holders advising them to pay back taxes. And I underline here, taxes they may owe. So I have a tax accountant that I've worked with extensively in the past for consultations, and he told me there's 3 different letters that people are getting, but he told me if you get a letter, the letter makes it appear like, hey, we think you might owe some taxes. Double check basically and consider refiling or updating your filing. He told me specifically, if you get that letter, translation, the IRS knows for a fact that you owe some money, or they have strong reason to believe that you owe some money. So if you get that letter, take it very, very seriously. The IRS is actively watching. I think they're doing some chain analysis type stuff, some software. Many years ago, Coinbase offered to sell the IRS some software, and they offered to sell part of their database also to the IRS back then, if I remember correctly. Coinbase never followed through with that, but I think the IRS already has that data if you ask me personally. Number 8, foreign asset reporting. So this is a big one. If you're using cryptocurrency exchanges that are not inside the US, and now this gets challenging because what about decentralized exchanges, etc.? It really is a little bit murky. You could be responsible for some foreign asset reporting. Just something to be aware of. If you're using US exchanges or US approved exchanges, in most cases it's probably not going to be a problem. But again, consult with your tax professional. Number 9, this is one that's going to get some people in trouble because they're not aware of this. Hard forks and airdrops. The IRS has specific, the keyword here is specific. They have absolutely already addressed this. The IRS has specific guidance on hard forks and airdrops. If you receive new cryptocurrencies through either of these methods, you may have taxable income at the fair market value of the new cryptocurrencies at the time they are received. So this is very similar to businesses that accept payment. If you get a cryptocurrency airdrop, now here's a challenge. Historically, 80 to 90% of airdrops end up going down in value. So if you get an airdrop, and there's people who've been getting, thousands and thousands of dollars in airdrops, and there'll be more people throughout this year getting thousands and tens of thousands of dollars through airdrops. That is taxed as income at the moment it is received, not just the moment it is sold. So it's taxed as income if you get an airdrop and it's valued at $1,000, but when you finally sell it, it's valued at $100. You owe taxes on the $1,000 value the moment it was received. So again, number 10, and this goes without saying, but this is the one that is so challenging, and I'll share with you some of my personal experiences right here, and then I'm going to talk to you about how I do my own crypto taxes. So number 10 says consider professional help. Here's the challenge. I have probably spoken personally with half dozen tax professionals. Of the 6 or 8 people that I've spoken to, I would say 3 of them actually have real experience with cryptocurrency, and the others sort of just researched the laws. These laws are not crystal clear yet, and some of them are incredibly confusing. In fact, I just did a video about a new crypto law that seems almost impossible to be able to comply with. I'll put that video above or on the end screen. But understand that what I recommend that you do is do your very best when it comes to looking for a crypto tax professional. Your tax professional is not responsible, by the way, if they give you advice that is not 100% accurate. I mean, they just have to give you the best advice based on a certain professional code of standard. But if the IRS comes along and says, hey, you made a mistake here, you owe us $1,000, you owe us $10,000, you owe us $50,000. It's very difficult to sue your accountant for giving you bad advice, just so you know. So how do I do my crypto taxes? Well, there's 2 things that I do. And one is sort of to save money. And the other thing that I do is just about trying to be prudent. First of all, I don't get stressed out about my crypto taxes. I just don't. I do my best to turn in a complete tax return with the information the best that I can. The first thing that I always do is I use Koinly. I'll put a link in the description. It is an affiliate link. You will be supporting the channel, but I've been using this service, I think, for 3 years now. I absolutely love it. When I talk about tracking all of your transactions, when you set up this service, and by the way, they're not sponsoring this video. I literally use their service. It is phenomenal. You enter in all of your wallets, all of your exchange accounts, and you basically just sync it. I told you I had 41,000 transactions in my last tax year. I want to say it took probably 20 or 30 minutes. It had all of my forms. I just had to choose, here's that form 8949 in Schedule D. They had that. They had, the TurboTax information. If you use that, they have all these forms available, and you just select which form. Now, here's the crazy thing. They do all of this. I haven't calculated my taxes yet for this year, or this past year, but they do all of this for free in the past. So you could set it up, you could calculate everything for free, but to get the forms, they didn't charge you till you went and got the actual forms from the website. But it makes it so easy to be able to file your taxes using that form. Then what I do is I take that form to my accountant at that point in time. So when I'm communicating with them what I'm doing, they have a little bit of a better idea when they're looking at my tax forms. And any questions that I have, sometimes we need to make adjustments on the actual official forms that they use. Sometimes they just use my forms from Koinly if everything is in fact accurate. But what it will do, it will save you a tremendous amount of time on bookkeeping. If you just take all of your transaction statements, for example, to an accountant, then it can cost you a significant amount of money in just bookkeeping fees alone when it comes to cryptocurrency. Koinly makes it easy. It is what I use, and definitely feel free to use that. Now, here's some additional general advice I want to give you. Do your very best. There's so many of these laws that aren't yet crystal clear. So you just have to do your best. I personally have never been audited, but I know at least 2 people that have had an IRS audit. And the advice that I've always heard is do your best. If the IRS ever reaches out to you and they have a question, the worst thing that can happen is for them to ask for a statement and it look like at that point in time you were being misleading in your statement, meaning you did not disclose something that you should have disclosed. So don't hide anything. Do your best to file things completely. Do your best to be as accurate as you possibly can and obey all crypto laws. If something happens and it looks like an honest error, the average person is not going to have too much of a problem. But if it looks like you're trying to hide something, then you run the risk of creating an entire full-blown tax audit, and nobody actually wants to go through that. For most people, your crypto taxes are not something you need to be afraid of. It is not something you need to be fearful of. In fact, what I recommend that you doing totally for free is come over here to Koinly and just sign in, get set up with it. You don't have to pay for anything until you get your actual forms, but they have a dashboard and you can sync it at any given time, and you can monitor throughout the year kind of your taxable situation. That way, when you get to the end of the year, it won't be as scary for you going forward when you do your tax returns for this year. But you can absolutely set up your tax returns for last year. The crazy thing about Koinly, by the way, if you ever did end up in some sort of audit and you owe crypto taxes or you didn't turn in proper documentation for, say, 2022 or 2021 or whatever, you can go back several years in Koinly and have them do basically, again, just put in your wallets, put in your exchange accounts, even your all of your decentralized wallets like your MetaMask and all that stuff. All you have to do, your ledger, all that stuff, just enter in your wallets and it will sync it all for you, fill out the forms for you. It's really, really incredible. If you do that, I think for most of you, it's going to take a lot of the pain and a lot of the fear of doing your crypto taxes. It's going to take a lot of that fear away from you. Stay tuned to my channel. I've got some incredible projects coming up that I'm going to be talking about. We're talking about earning passive income in cryptocurrency. Thank you so much for watching. This is Crypto Wealth. I'm out.